In this video, I'm going to do the technical analysis of S&P 500 index for the week commencing from December 27, 2021. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. So see, this is the daily chart. Okay. Now, if I show you this thing here on the daily chart, okay, this is the previous technical analysis that I did for the week of December 20th. So in that week, I told you that market will come down, market will come into the cloud, okay, and after entering into the cloud, there will be this initial resistance at 4572 or 4575, and if it crosses 4572 or 4575, then it will come towards 4527. And because 4527 is a very heavy resistance, so after hitting 4527 there are very heavy chances it will retrace, and it will retrace heavily. And if for some reason if it doesn't, then in that case it will cross the cloud and will come down. Okay. And also I told you that when it retrace, okay, so first it will hit the boundary of the Ichimoku, okay, here or here. So it will hit the boundary of Ichimoku, and if it is able to cross the boundary of Ichimoku, in that case first it will hit 4635, okay, then it will go to 4690, and finally the final resting place is 4740. So this was the final resting place, 4740. Now if you look into this chart, okay, the high of this candle that was formed on December 23rd, it was 4740. This was 4740. Okay, the same thing I told you here also, November 22nd, that whatever happens whenever it hits 4740, that is the supercritical resistance, market will come down. Nobody can save the market in coming down. And then you see after hitting 4740, then it came down. Now here it hit 4740, then it came down. So it worked as it was predicted. Now comes the technical analysis for this week, December 27. So we will begin with the weekly chart. Okay guys, so we are here on the weekly chart and this is the weekly chart. Okay, so weekly chart means one candle represents 1 week. Okay, not 1 day or 1 hour. One candle means 1 week. So if you look into this, the weekly chart, okay, there is a very heavy bull candle that has engulfed the previous bearish candle. So this candle has engulfed the previous candle completely. Not completely, because the body of this candle closed at 4725, and this candle, the high of this candle was 4731. So not completely, but partially, okay, or almost, it has engulfed the previous candle that was the bearish candle. So this is an indication that market is trying to be bullish. Okay, so this is the indication, this is the interpretation of this particular candle, this bull candle. Okay, now on Monday there are chances, if the Asian and European market moves up, in that case there will be a gap up, and with this gap up, okay, and if the market opens above this 4740, that is a super critical resistance. If S&P 500 opens with a gap up above 4740 on Monday, in that case it will break everything and then it will move up, and then it will make this the new high. Okay, now let's do the technical analysis and then we will discuss all of these if and buts on the daily chart. So technical analysis, see, this is the upper band of the Bollinger Band. Market has closed above the median of the Bollinger Band, which means market is bullish. Okay, now comes the moving averages. If you look into the moving averages, there is a clear fan out, okay, which means market is bullish. So last week also I told you, then last week. So I'm telling you this thing for last many months, that see, because there is a clear fan out, there is no crossover at all, and there is a clear fan out. Even if you see market is coming down, market is not actually coming down, okay, but it is giving an opportunity to buy on day. Okay, so until and unless there is a crossover, or until and unless market closes below this fan out, okay, two successive times, two consecutive times, okay, then only we will say yes, now the S&P 500 is bearish. Okay, so as of now through moving averages it is bullish. And if I talk about Ichimoku, so again it is market is moving above Ichimoku, which means market is still bullish. So through these indicators, or through this all of these indicators, market is bullish. Now if I talk about some other technical indicators here, then we have MACD. Surprisingly, MACD is still bearish. Okay, MACD is still bearish. MACD is not supporting the bull movement here. Stock RSI, okay, stock RSI is bullish, but it is less than, means both K and D channel are less than 50. Means there is not enough bullish momentum through stock RSI, but yes, it is bullish. Divergence, okay, now divergence is increasing. It is almost 64, and once it will be around 71, okay, then the market will come down for sure. Because that is the historical divergence, okay, 70, 71, 72 approx. That is the historical divergence of S&P 500. Now comes the momentum. Okay, so momentum is neither favoring bulls nor favoring the bears. Now, okay, here, so if you see that market is almost range bound, okay, the high and the low, the high and the low. So last week also I told you in my technical analysis that looks like market is in the consolidation, and in the coming week, okay, if this kind of pattern is formed, then yes, there are very heavy chances that market will be in consolidation. So here up, if you see on the weekly chart, then it looks like yes, because 1 2 3 4 5 6, yep, almost 5 or 6 candles, okay, market is not going anywhere. Okay, means 4740, and then this 4527. So market is fluctuating between 4527 and 4740, which means market looks like it looks like market is in consolidation. Now if in the coming week, if a candle is formed that is again in this range only, in this range only, then it will be a confirmed consolidation of S&P 500 index. Okay, uh, fine. Yep. So we have talked about the technical indicators. So through all of the indicators, market is bullish. But again, just like last week, again, MACD is not supporting the bull trend. And MACD, as we all know, that MACD is the most important indicator here. Okay, means not just here, but in every technical analysis, MACD is the most important indicator. So all of the so all of the technical indicators are saying that market is up, but MACD is saying that market is bearish. Okay, so you can say like here again, 70 to 75%, okay, market is bullish otherwise, and then okay, means see, until and unless MACD is bullish, okay, we cannot say market is bullish. So MACD needs to be bullish, then only all of means then along with all of the indicators, then we will say yes, now market is completely bullish, like this one. Okay, so this was a technical analysis here, okay, on the weekly chart. Now let's move on to the daily chart to see what is most likely to happen on Monday, Tuesday, Wednesday, Thursday, and Friday in the coming week. Okay, so this is how we always do, and this is how we are able to get the most accurate results. So let's analyze the daily chart now. Okay, so we are here on the daily chart. This is the daily chart. Okay, daily chart means one candle represents one day, not 1 hour, 1 week. So one candle means one day here. Okay, so now we will do the technical analysis on the daily chart here, and then we will see like what is going to happen on Monday. Okay, and how that Monday will drive the market, okay, in the rest of the week. So like I told you that on December 23rd, that was Thursday. Okay, market hit 4740, and then it came down. So let me first write the support and resistance levels here quickly. Okay. So up to now, if we were talking about this level, that was 4740. It is 4740. Okay. Then we have, so this 4740 is going to act as resistance because market closed below this level. Now immediate support is at 4690. 4690. Then comes 4635. 4635. Then comes 4592. Okay, or 4595 or 4592. 4592. Thereafter it comes 4572. 4572 or 4575. Okay, then comes 4527. 4527. Okay. So these are the support and resistances here. Now I'm going to add one more resistance here because see, if on Monday, if Asian markets are moving up and if European markets are moving up, then for sure there will be gap up open in the S&P, and if that gap up open is above 4740, then there are very heavy chances it will shoot up. Okay. Now so the immediate resistance, so this is 4740 is the immediate resistance. Thereafter we have this resistance at well 4790. 4790. 4790. Now 4790 is in the picture, which means that market may cross 4790 to hit 4800. Okay, but yes, whenever it hits 4790 it will come down. Okay, that's for sure. Now see, there is one more thing that I'm telling you for last few weeks. The high that S&P 500 okay, it made on November 22nd, the high was 4744. So 4744. This 4744 is the ultimate resistance for S&P 500, because in order to move up, in order to be bullish, S&P 500 must cross and close above 4744. Okay, see, this is how the market works. It must break its previous high in order to move up, as simple as that. So now you can say we have 4744 and we have 4740. So this is means 4740 and 4744 means this is very critical resistance, very critical resistance. Okay. Now there is one more thing. Okay, so these are the support and resistances. Now there is one more thing, let me show you here. Look into these three candles. These three candles, 1 2 3. This kind of pattern is what means, see, this third candle. Okay, there was this the gap up and then it didn't come down. Okay, but in general, okay, we this kind of pattern we call it as three white soldiers. Okay, so three white soldiers, 1 2 3. Okay, so yes, so it looks like it's a three white soldiers pattern. So what is this three white soldiers pattern? See, three white soldiers pattern, it signifies a change in the market. Okay, which means so I have I have some doubt on this particular candle, on this particular candle. Okay, because it is not fulfilling the criteria of the third, okay, the third soldier that was supposed to be here. Okay, but yes, but even though, okay, means even though it is not fulfilling the criteria of the third white soldier, but yes, it looks like through this pattern it looks like it's a three white soldier pattern. So if it truly is a three white soldier pattern, then what is going to happen? This is going to happen because the pattern of three white soldiers or the three black crows, see, this kind of pattern. Okay, sorry, just the bear candles only. Okay, these three bear candles. So if you look into these three bear candles, okay, first two candles are two black crows. Okay, the third one, it was not, but yes, it looks like. Then market movers, okay, uh, they might have thought of it, okay, like three black crows. So again, three black crows, whenever a pattern of three black crows is there, that means, that signifies a reversal in the market, a change in the market, and this is what you can see here. Okay, similarly, we are talking about the three white soldiers, because now we have these three white soldiers. Okay, so this is what is expected to happen. Okay, a reversal in the market, and this is what I was telling you on the weekly chart, that market is range bound, market is trying to consolidate. Okay, so now the market will move up only, only when it is able to cross this and this, both of these. When it is able to cross and close above 4740 and 4744, then only it is bullish, and it will move up towards 4800 or so. Okay, and then it will be moving towards 4900. Okay, but if it fails to cross and close above 4744 and 4740, then it is not bullish, means that in that case it is coming down. Now let's do the technical analysis. So the technical analysis here, okay, first the Bollinger Band, upper band of the Bollinger Band, market closed above the median of the Bollinger Band, market is bullish. Now comes the moving averages, a clear fan out. In the moving averages, market is moving above, closed above the moving averages, market is bullish. Ichimoku, market has closed above the Ichimoku cloud and is moving above the Ichimoku cloud, market is bullish. Okay. Now comes the MACD. So MACD, if you look into the MACD, MACD is now bullish. But yes, it is marginally bullish, but yes, it is bullish. Okay. Then comes the stock RSI. Stock RSI is bullish. Then comes the divergence. Divergence, as of now, divergence is normal. A momentum, okay, momentum is neither supporting bulls nor supporting bears. So through all of the technical indicators, it is now very, very clear that market is clearly bullish. It's a bull market. Okay, it's a bull market, but again, three white soldiers. Remember this, three white soldiers. Okay, so it's a bull market, but that three white soldiers, it can bring it down. Okay, because the again, three white soldiers means, or three black crows means, a reversal in the market. So back to back, three black crows, three white soldiers, back to back, again reversal. So the market is moving like this. Okay, and this is why I'm saying that there are very, very heavy chances that market is already in the consolidation. Okay, but now the coming week, that will confirm, that will make it like 100% confirm that yes, it is in the consolidation. Okay. Fine, so we have done the technical analysis. Now the so let's talk about Monday. Monday means December 27. See, if again this, okay, this is very, very critical, 4740 if on Monday, if the Asian markets and the European markets are moving up, in that case there will be gap up, okay, in Dow Jones and in S&P 500. And if that gap up is above 4740 or above 4744, in that case nobody can hold the market here, and the market will shoot up clearly. Okay, but if there is no gap up, and if the market is open below 4740, in that case, considering this the pattern of three white soldiers, market will come down. Okay, like this happened. Okay, similarly this will happen. Okay, so this is the only thing here. Sorry, so this is the only thing that you need to consider here. Now one more thing, see, whenever market comes down, now because we have these confluence zones here, 1 2 3, and this is 4690. Okay, that is mathematically, this is mathematically calculated. So whenever market comes down, market will find very good support here, very good support, and then market will try to avoid the Ichimoku, because once it enters in the Ichimoku, then again it has to cross either this way or this way in order to confirm a trend. So whenever market comes down, it will try to hold around here, somewhere around 4665. Okay, 4668 or 4665, and from here market may try to bounce back, and if not, then for sure it will come down. Okay, so and if you see that the market is range bound between 4740 and 4527, then that's a confirmed consolidation for S&P 500 index. Okay, so Monday, this is Monday, so you need to see like what is happening on Monday, particularly the open of the market. The open of the market will decide the fate of the market. Okay, so within 1 minute, at 9:30 a.m. or at 9:31 a.m. on Monday, it will be clear that where the market is heading to. Okay, and then you need to decide accordingly. Okay, guys, so I have given the link of this Discord spreadsheet in the description of the video, so you can take a look. Okay, and if you are ready to join my group to make 30% profits, okay, every quarter, in that case, just shoot me an email. Okay, and also I have given the links to my stock market options strategies, okay, programs in the description of the video. So should you wish to join my options strategies program, so you are welcome. So guys, this was my technical analysis for S&P 500 index for the week commencing from December 27 2021.